Adam, I was reading one analyst saying the 1, 2, and 3 things we're looking out for are deposits, deposits, deposits.
Yeah, absolutely. That's the key thing, isn't it? But I mean, going back to this AT1 issue, it's still so much of a kind of an uncertainty around how it's priced into the market. There's a couple of things that we're watching. The UniCredit, whether they exercise their call option, which is coming up in June, that's a pretty big kind of will be quite a big event and one to keep a close eye on. But of course, in this part of the world, in Japan, Sumitomo Mitsui, they're heading or continuing with their marketing for their AT1 bonds, a couple of perpetual bonds there. So clearly the banks are wanting to still go ahead with plans that they had prior to all the ructions that we had a few weeks ago. But whether it gets priced, I think it's around April 19th, that one. So that's another key date to watch for. So there's a couple of events coming up, and I think then you'll start to get a sense of how are investors pricing these, what's the kind of future looking like for this market, how are regulators going to, or whether they're going to kind of be clamping down, giving quiet words into the ears of bank officials to say, try and keep things as normal as you can here in this market.
What are we expecting to see in terms of what we can gauge from the broader economy?
Well, of course, the big thing, Sherry, remains kind of the extent to which the banking ructions and the issues with deposits, which largely has been caused by the huge increase in rates over a short space of time, with a lot of fixed income instruments obviously having sold off significantly. So how much that is influencing people's expectations for not just a contraction in kind of credit growth, but how that feeds into consumer spending, the broader economy. And of course, there are a lot of indications and a lot of what we've heard from senior bank CEOs in recent weeks is that there's still, the consumer's still there. There's still a lot of indications to suggest, a deep recession is not imminent. But of course, we had the Fed the other day saying that, maybe the forecast for a shallow recession is kind of like pretty baked in at this point. So I think that's what we're going to be looking for. We're going to be looking for any indications that what's happening on the balance sheet of banks is feeding through to a more problematic outcome for the economy than people have been expecting when they started this year.
Could we actually see a better picture when it comes to the big banks kind of seen as the safest custodians? They would have benefited from some of that deposit flight in that way.
They may have done, Heidi, and that's the kind of one of the issues, isn't it? It's how much of, when a lot of these banks were standing behind some of the regional lenders that were having troubles, when they're putting up these extra deposits, when they were having discussions with Yellen and senior Treasury officials that they were going to stand behind what was going on, and have they in some way been able to benefit from that, or have they just kind of in essence, spread the risk more broadly across the banking sector and stoked up further problems for further down the line. So there will have been clearly some beneficiaries out of that, and that will be one key thing to watch for.